Hello everyone and welcome back to Sudden Wealth. I hope you're having a very good start of the week. By the way, we are almost at the end of January, if you can believe that, my God. If you do enjoy the content, please drop that like and subscribe. As you know, that's the only thing that I ask. So thank you very much for your support. So, since my last video, basically the S&P 500 indeed closed on the new all-time highs. So we can now officially close my prediction back. I don't remember, but I'm quite far away. About new all-time highs in the stock market for the NASDAQ 100. That's done. Dow Jones, that's done. S&P 500, that's also done. So we can close that one out. Now, you may recall also another thing that I said back in 2023, around the summer period. I said there's no recession coming in 2023 because at the time, everybody or a lot of people were still expecting it, and rate cuts in September or October, blah, 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 all of this. So I said, yeah, there's no way that's going to happen. Then if you recall, there was this article on CNBC where all the top economists were agreeing that now 2024 will not have a recession and the soft landing is what we're going to have. The Fed said the same thing. Other banks, also Goldman Sachs, Morgan Stanley, JP Morgan, were saying that they don't see any recession in 2024. And the sheer fact that everybody was agreeing that there's no recession coming in 2024, that makes me think that we are much closer to one than people realize. If you pay attention to Europe, Germany is in recession, the Netherlands is in recession, and a bunch of other countries are approaching very quickly recession levels as well. If you do think China is a big mess, as everybody knows, Japan is almost at recession. So I do have the feeling that we are going to approach, or it's going to become obvious over the next few weeks and months, that the recession is much more likely than people think. Now, big distinction. That doesn't mean anything for the stock market. Okay? Forget there's no connection between one and the other. In fact, most likely, the more probable recession we have, the better will be for the stock market. Now, people are saying, oh, but inflation is still above 3%, it went up, blah, blah, blah. Yeah, but most people are not paying attention to something. Inflation went up in December, which is a very low productive month, where people take holidays and spend a lot of money. If you check PPI, which is the producer price index, which is basically, if you will, the company's inflation metrics, that has decreased substantially in December because, of course, companies had to prepare for Christmas in October and November. So in December, they should already have everything ready. So December has already come down quite aggressively. But let's say that it didn't come down. Let's put out that possibility. The only thing the Fed needs to do is change the metric of the 2% to the 3%. They just need a story, narrative that is convincing enough for people to believe it. So let's say that the Fed says, look, we've rerun our old economic models, and I'm creating a scenario here. Nobody said this, okay? So don't get confused. The only thing the Fed needs to do is look, we rerun our economic models, but now we have to factor in artificial intelligence. My God, the improvements are beyond anyone's expectation. As such, our updated models have determined that the optimal rate of inflation is no longer 2%, but it is 3%. All of a sudden, the inflation problem goes away. Another scenario. Some conflicts in the Middle East escalate. Some images of terrible massacres pop out. All of a sudden, we need to be able to tolerate 3 or 4% inflation in order to win the war on terror, in order to win for freedom. It's going to be called Operation Freedom, Operation Twist, Operation, I don't know. They will come up with a nice, cute name, and all of a sudden, inflation above 3% is now tolerated. My point being, I don't desire any of this to happen. That's not my point. My point is, if they fail on bringing inflation below 3%, then they will simply come up with a story of why inflation at 3% is actually ideal. And then it all depends on the market. Does the market accept it, or does the market hate it? Anybody guess? I am tilted to believe the first one. I mean, if it's inflation 10%, nobody is going to be tolerating that. But 2 to 3%, most people think, who cares, right? In a $100 purchase, 1% means $1, right? So, I don't think most people will care. Now, let's go to the crypto world. Bitcoin has sold down to around 40K, and actually we went a little bit below it. 38K should be a strong support. For those of you who don't know, GRAYSCALE Bitcoin Trust, that had a lot of Bitcoin basically frozen, if you will, by the way that the trust worked, is now selling huge amounts of Bitcoin, including on the Coinbase exchanges, etc. I think they have about 9,000 Bitcoin to sell, 9,000 to sell in total. I think they've been selling quite a bit, but let's just look at the big number. 9,000 times 40,000, that's 9,000 versus 1 second. They have about 9,000 Bitcoin at 40,000, that's 360 million. But they also had other Bitcoin going back that should only become available without the ETF, would have become available only in June, I believe. So all in all, we're talking about, I think the total is approaching $1 billion. You also have the typical effects of sell-off after the ETFs are out, which is normal. Some of the ETFs are in bear market, again, which is normal. So if you've been following this channel, you are very well aware that when before they were approved, I said the approval will be bullish, price will pump, and it pumped to about 49,000. But make no mistake, as soon as those things start trading, that's a big sell the news event. And that's exactly what we've had. Now, we've gone from 49 to 40 or 49 to 39. Is it, oh my God, a dramatic thing? No. We've been above 45,000 in January, which puts us in line with the target, with the previous cycles. It would be nice if we could move towards 45,000 by the end of the month. There's no question about it. However, it's not a big deal because we've been above it and quite substantially above it. Now, what does that mean for PULSECHAIN, PULSEX, and X? Also, those are experiencing a bit of a sell-off. It's normal. We went basically vertically up. At some point, PULSEX was up, almost 400%. Pulse was up, almost 300%. And even the incentive token was up, I think 450% or so. So those these sell-offs are actually quite bullish. In fact, if I see Pulse below the day one SEC rate, I will accumulate some more. PULSEX, it's less than half of day one SEC rate, so in my opinion, it's still very undervalued. My personal opinion, not financial advice. X also looks attractive. And of course, Hydron and Icosa as well. Now, Icosa has pumped quite a bit. However, it's still quite undervalued. So I do believe it has very good potential. In any case, my opinion and what I'm trying to do nowadays is whenever I see these bigger sell-offs, I try to buy bigger clips. So instead of buying every week, regardless of price, yes, I also felt the FOMO of trying and go and buying the past few weeks, but I do avoid buying when things are jumping hundreds of percent. I prefer to buy when I see a sell-off of 30, 40%, it's fine, 50, 60, around that, then I will just buy bigger clips. Also I cannot be, I have other responsibilities, right? I cannot just go all in and have no regard for my family's financial situation in the present, right? In any case, I did mention my previous live stream last Wednesday. Yes, sell-offs are in the game. Sell-offs will come. My opinion are buying opportunities, but once again, people love to buy the green candle, not the red candle. Fine by me. I'll buy the red ones if nobody wants them. And with that, guys, I'll leave you be. I'm considering doing a live stream still this week, but I'll keep you posted on that. I'm not sure if I'm going to be able to make it, but I'll try. In any case, guys, thank you very much for your support, and I'll catch you in the next one.